Oh, yeah, baby.
Wow.
The Lone Lab Podcast is back. Welcome, everybody, to the Lone Lab Podcast. Season 2, Episode 1. I'm with the magical, the wonderful, the icy, Mr. James Weber. James,
Let's go.
how we doing today, baby?
What an intro. Maybe the best yet. That's how you open season 2.
That's how we open season 2. Welcome back, everybody, to the Lone Lab Podcast. Like we said, it is season 2, episode 1. We are very grateful to be here with all of you guys. It's been a little bit.
Yeah.
We took some time. We took the holidays off, but we are back. We have an awesome episode for everybody today. We're going to do our normal segments, mortgage rates in a minute, which usually take about 5 minutes.
Maybe a little bit more.
We're going to do a couple lab-tested questions. We have an awesome interview with Michael Glenn of Village Realty in the middle of this episode, and then we'll get out and get you guys on your way. But thank you guys for being here for season 2. James, what's good? How we doing?
I'm doing well, man. Coming out of the holidays, feeling good. A lot going on right now, both personally and with work, but just trying to keep my head straight on, trying to stay positive. All the normal stuff that we deal with.
Without a doubt. It's at the beginning of the year, everybody always has their goals. You're ready to start new, get into some new habits. So it's an exciting time to get into that stuff and get going with everything.
No doubt. A lot of people with their New Year's resolutions are either still going or maybe falling off the wagon a little bit. But when we do our business planning and the goals that we set, it's a little bit more in tune, right? There's different action items that I personally have set for myself that help me achieve those goals. It's not just a blanket statement, I want to do this. There's a lot more meat and potatoes behind it.
For sure. Actionable things that we can take into consideration and get done.
Exactly.
It's always a fun and exciting time of the year to start off fresh.
It is.
Here we are starting off fresh with the Lone Lab Podcast too for season 2.
It's a really good and bad thing about this business that we're in, and really many sales roles at the end of a fiscal year or a calendar year. You start at zero on paper, right? We still have our client bases, we have our business, we have the things that we do every day to ensure that business keeps coming through. But you're starting over, man.
Without a doubt.
You got to get that momentum back. You got to get it quick because these winter months notoriously are a little bit slower, but spring market has already sprung.
It's here.
It's here.
It's here. It's starting now. More leads coming in. People looking to get prepared to buy in the spring, which is very...
people being proactive, like we had said.
Exactly. Right before or when we ended season 1, that's what we said, and we can see it. So people are heeding our advice. We love it. Let's get into our first segment, mortgage rates in a minute, which usually takes 5 minutes. A lot has happened with mortgage rates since our last episode ending season 1.
Yeah, let's educate, man. So we've seen a lot going on. Was it now 2 Fridays ago, the president came out, and this isn't a political statement. It's not. This is not what this podcast is about. But the current administration does say a lot of things. Whether that happens or not is somewhat in the air, right? We just don't know if this is actually going to happen, but it was a big bomb. President Trump is ordering his representatives, the government, to buy $200 billion worth of mortgage-backed securities, which is essentially a month of supply, right? So that injection into the economy not only will help mortgage rates go down, but it will stimulate borrowing. It will make our jobs probably a little bit tough if it actually happens because mortgage rates will fly down very quickly. But I'm not going to sit here and complain about it. Now, again, that hasn't happened yet. And we're now seeing the effects of that and more geopolitical things going on with, America and Greenland and all the things that you see on the news. That impacts your mortgage rate. That impacts your portfolio. You've seen the bond market. You've seen the stock market be extremely volatile. We touched mortgage rates, average mortgage rates, 30-year fixed, 5.99 for a hot second. And now we're back up into that comfy zone that has been recently comfy, I should say, in maybe like the 6.25 range.
It's great that you said that the injection of funds or the purchasing of bonds have not actually happened yet. And I think that's a misconception with everybody out there. You see the headlines and they are just that, but there's nothing pen to paper quite yet. Now, when those headlines came out, and President Trump announced that he wants his representatives to do this, we saw a big dip in rates reacting.
That's how the market works.
To that news. It's a reactionary market.
And people say, oh, wow, time to start buying bonds now before that insane injection of that goes in, because then all of a sudden, those bonds aren't worth as much at that point.
When those headlines came out, James, you mentioned it. We hit 5.99 average mortgage rate for a hot second and then kind of bounced back. We had a little bit of a correction. A couple points on that. One is those sitting on the fence of refinancing did miss out on an opportunity that only happened for a minute there, right?
Yeah, but people like you and I and the relationship we have with our clients, and we establish our strike rates and we know when people want to go. There's trust there enough that we both gobbled up some refi business during that little dip. Now, I definitely didn't get to every single person that wanted to refi, but that's how it goes. The stocks and bonds trade the same way intraday, each and every day. People don't realize that. We said this in the last episode. The Fed meets 8 times throughout the year. When they make the decisions about the federal funds rate being changed, mortgage rates are already changed, man. That market is traded each and every day. Mortgage-backed securities are traded on the bond market, which is, again, sounding like a broken record, but actively traded. So we see that all day, every day. We see how the mortgage rates move. It's very tough sometimes to explain that to clients, especially first-time home buyers that are sitting there waiting for mortgage rates to drop beneath, let's say, 5.875 or some magic number for them. Well, guess what? If that happens, things are going to get very tough for that first-time home buyer to compete.
No doubt. It's the reason I bring up that they maybe missed out on that lower rate at the time is, as you mentioned, we have these conversations with our past clients or even people who are thinking about refinancing is, hey, listen, these can drop and then come back up right away, which is what happened in a flash. So it's always great to prepare to pull the trigger with your loan officer that you're talking to or us. Hey, once these drop, trust us, right? Because we want to take advantage of that. And those who were out there saying, well, what if they go lower? I might want to wait. Well, guess what? You missed out on the lower rate as of right now, right?
And the same people that, it's January 22nd, Thursday, when we're recording this. Last Friday is a Friday, but before a holiday weekend. Usually we're walking into that next Tuesday, Monday being off for MLK Day, and there's not a ton of trading going on. But over the weekend is when we saw the news with the U.S. and Greenland and these different deals and such. The market went nuts Tuesday morning. Both the stock market and the bond market sold off like crazy. So anyone that was trying to think about a refi late last week, or maybe you went under contract on a purchase late last week and didn't lock because you thought, hey, it's a holiday weekend. I told some people we probably won't see much. It wasn't a market indicator. It was geopolitical. This was something that we didn't know it was going to happen. It just goes to show with evidence that we can't control this stuff.
No doubt.
And we don't want to either.
You can't. And we always say don't time the market when it comes to buying a home, right? You need to be comfortable. You cannot time the market. You can, however, with the advice of us, if you already have a mortgage, time a refinance and have a strike rate and don't wait it out to see if you can get any lower. Don't get greedy.
Don't get greedy. Listen, our goal as established mortgage advisors is to ensure that our clients always have the cheapest money, always have access to the cheapest money. And cheapest money doesn't always mean the lowest rate. Maybe it means for that family, it's a no-cost refi, or they're taking cash out and they're taking a higher rate to get a credit back to pay for different things. It all depends on your situation. Everyone's different.
A lot has happened with rates, as we said. Again, mortgage rates in a minute, which takes about 5 minutes. It's always a great recap.
But that's a good update, though, because there's been a ton of stuff going on in this early portion of 2026.
What's your prediction for, I know it's beginning of the year. I know we don't have a crystal ball, but what's your prediction for this year?
I'm staying pat with what I said before, which was sub 6% by Q3. And I knew that once it got beneath 6%, that it wouldn't be around for long, because we're not on a slide here, guys. That's not how the stock market trades. That's not how the bond market trades. It's always going to be that up and down roller coaster. We're not seeing the hockey stick. What we're seeing right now is just a normal market where things get traded. Bond prices go up, bond prices go down. Stock prices go up, stock prices go down.
Up it's 1 week, down
fall.
1 week.
It's not a free fall.
Nope.
But are we going to see things inch lower, slowly but surely, like we had said before? I think so, and I hope so.
What's your prediction just in general, not only refi business or rate business, but just for 2026, the housing market? What's your prediction this year?
Well, I think with the mortgage rates going down, again, slowly but surely, we're going to see home values continue to rise. Someone that we both follow and that I've been lucky enough to speak with pretty frequently lately for other reasons is Barry Habib. And Barry always says this so eloquently, so I won't quote him directly, but if house prices go down, that means something really bad happened. That's bad for the economy. We don't want home prices to go down. We want mortgage rates to go down. So if we can see mortgage rates go down, home prices, again, should, in a normal economy, supply and demand, go up. We're going to see more competition. We're going to see more sellers be psychologically comfortable with going from, let's say, 3% to 5.5%, rather than 3% to 7%. More sellers means more inventory. means more buyers, right? Simple economics.
I think the housing market is in a really healthy point right now.
Yeah, we still have a shortage in inventory, but it's stronger overall.
Yeah, and I guess I would take back the really healthy. I would say we're in a healthy spot comparable to where we've been over the past few years. The housing market in general, from prices, from inventory and rates, things are starting to come together to make it easier for people to purchase a home. The lower rates, inventory tightening loosening up a little bit, even though there is still a bit of a shortage, but we're going in the right direction as opposed to going in the wrong direction.
We could talk about this for another hour. I know we want to wrap up the 5-minute segment, but when we talk about this injection of the government buying mortgage-backed securities, guys, that's exactly what happened during COVID. That's why mortgage rates went down so much. That mortgage at a 2.5% interest rate has such a lower likelihood to get paid off early than somebody with a 7%, because that person with the 2.5, when they're moving, they might not just think I need to sell. They might rent it out. And guess what? That mortgage stays alive. And that goes back to what we were talking about with the portable mortgages and all the different things, the headlines that were happening at the end of last year around like Thanksgiving time. There's just so much to consider rather than just where are rates and where are home prices. There's a lot behind the scenes.
And last thing on those headlines that came out at the end of the year, none of those have been pen to paper yet. The 50-year mortgage, the portable mortgage.
No.
Is that nothing has been actually solidified? It's all been talk.
Yeah. What we just said, right? A lot of stuff is said right now. Most of it is, I think, done strategically to try and stimulate things.
Sure.
So I'm not saying it's not done right or wrong. It's just that it's a headline and it hasn't happened yet.
I love it. First mortgage rates in a minute. That takes 5 minutes segment of the year. A lot has happened. It's going to be, there's going to be a lot of different updates this year on that segment. I think we're going to have a lot of movement, and we'll keep you guys in tune and posted on everything. James does a great job of explaining it in layman's terms for everybody, because there is a lot. It's a lot.
We're going to see those blips like we just saw too, right? There's going to be different things that happen that really impact these mortgage rates. So we'll be here to educate you guys on it.
All right, let's get into our next segment, everybody. We're going to do lab-tested questions. We have a few anonymous lab-tested questions. Before we get into those, everybody, we want you to contribute again this year. And no question is a dumb question. We will take them all. We love interacting with all our listeners, all of our followers. So please submit any lab-tested questions you have about the housing market, about anything in general. We'll answer it all.
We also love all of our lab tested questions. These anonymous ones are great, but we like calling out our followers too. So if you're comfortable putting your name on this thing, please do. We'll give you a shout out.
Okay, so our first lab tested question is, what is the biggest mistake first-time homebuyers make that costs them the most money? It's a good question from anonymous. Question.
And I think the easiest answer from my experience is somebody putting down too much. They're taking a lesser mortgage thinking this will really help me in both the short term and the long term with my payment. Then they get into the home and they realize, oh man, we want to redo these floors. Some of these windows need to be replaced. And all of a sudden they're really house rich and very cash poor. And it puts them in a situation that frankly, we don't recommend. Remember, our job is to give people options. It's their loan. I can't tell somebody what to do. But if I have a first-time home buyer looking at 10% down versus 5% down, I'm going to say, look at this 5% down very closely. Your monthly payment might be $200 different, but you're quite literally bringing double to the closing table. Do you like the fact that you might be more liquid? No, that you will be more liquid post-closing? And most people say, yeah.
Such a great point. I can't stress enough that when you purchase a home, there are expenses that you need to take into consideration after you buy the home. Yeah. You mentioned floors and maybe the cosmetic things that you want to do, but what about
we both did our floors?
What about a water heater that breaks, right? What about
those are the things that's not cosmetic, man. That needs to be done now.
We just had in our house, we just had a pipe that froze. Luckily, it didn't burst, but I'm thinking to myself, okay, I need to figure out what I need to do to avoid this from happening, or if it does burst, I need to pull out drywall. Shit costs money.
That happened to me in my old house, man.
You don't want to be in a position where you're cash strapped. So I think that is such a great point that you bring up, that costs people more money down the road as opposed to upfront.
It's cliche. You can't call your landlord anymore, though. You can't. It's your house now, and frankly, it's your problem, and you need to fix it.
That's my number one as well, too. That's what I was thinking when this question was submitted, is really strategize your cash to close and what your monthly payment is, the rule of thumb is for every extra $1,000, right? It's a $7 to $10 difference in payment, just depending on the loan,
How much you're
on the loan
borrowing,
amount. So again, I'll say that again. For every extra $1,000 you put down, it's only going to change your payment by an extra $7 to $10. People, when I tell my clients that, they're like, "What?"
Yeah.
But it's true from a math, just from the mortgage amortization equation and calculation. So you really have to be cognizant of how liquid do you want to stay post closing for those different expenses that comes with a house and maintaining a house. We mentioned cosmetic things. There's also things that need to get done now.
Right.
If something happens. And like you said, cannot call Mr. or Mrs. Landlord and have it to come get fixed.
Listen, you can always pay down your mortgage. You can make chunk payments later. What you can't do is punch a hole in the wall and take money out. The housing market in America is very different than other places in the world. And the reason it works is because your home is not a very liquid investment. It's frankly extremely illiquid. To get money out, you have to do a cash out refi, take a line of credit, have some sort of private lien or something, which is a different story, or sell it, right?
Yep.
You can't use your house as a credit card.
I think this next question is a good segue from the first lab tested question. It was, how much money should I really have saved before I buy a home? Not what the internet says. What is your guys' opinion on how much money you should have saved? I'll take this first.
Yeah, go for it.
I always like, especially first time home buyers, to have anywhere from 3 to 6 months of payments,
Reserves.
or bills, your monthly bills left over after closing.
Yeah.
How realistic is that? It's realistic.
I think we see it more often than not. There are some people that squeak by, but also remember their situations might be different. Perhaps they're getting a gift from family and it comes in later, or perhaps they're getting a grant at closing. Like everyone, it's kind of a cop out to say that it's a situationally specific question to answer, but it really is. And I realize that we say that pretty frequently to these lab tested questions, but that does dial it back to, what are you comfortable with as the home buyer? Because this is your house and your loan. We're here to help you, but how much money do you want left over after you buy this place?
Yeah, it's all about strategizing and communicating, but to give an answer, that's at least how I look at it, is anywhere from 3 to 6 months reserves or monthly payments. So if your monthly payment is $2,000 a month, you'd like to have, what is that, 6 to 12 grand left over if possible. Again, how realistic is that? It depends on your situation. And like you said, maybe you're getting a big bonus coming that you can replenish that.
And that's why you're buying the home, right?
Yes.
It's like, hey, I'm not going to be very liquid right now, but we're expecting things to change later.
So yeah, I would either keep that in your account and keep it liquid, or work towards that once you actually purchase the home, and make sure that you strategize that as you're looking to buy a home.
Because the goal always remains for our clients not to go into their home and all of a sudden feel like, oh man, I've got this big old mortgage payment. I can't go out to dinner with my wife anymore. We can't go on vacation. The goal is always make your payments, still save money if you can. Things change, situations change, people gain new jobs, people lose jobs. It's not always perfect, but the least thing that we can do is help people plan.
The last lab tested question is probably one of my favorite lab tested questions ever. I think this is anonymous. It came from an LO. They didn't want their name to be on the Loan Lab podcast, which is okay. But this person asks, what's the wildest thing a buyer thought would count as income or assets when applying for a mortgage?
I have a lot of stories on this. One was recent where somebody had, legitimately over $100,000 sitting in a safe and was like, can I bring this to the closing table? That thing, like
the cash.
Come on, man.
Yeah,
no,
the cash
you
money.
Can't. And great that you've got that, but you cannot bring that. Where did that come from, right? The questions start being asked and answered. Oh, man.
Let me think.
I've seen OnlyFans on bank statements.
Yeah,
I absolutely have.
I was going to bring this up because I didn't have a specific example, and I can try to think of one off the top of the head, but I think we heard a story from somebody that we used to work with that a dancer, we'll say it's a dancer, was trying to apply for a mortgage, and they asked for proof of income, and this dancer scanned a bunch of cash on a scanner and then emailed that and said, here's my proof of income.
It's cash.
It's cash. And that's what
doesn't count though.
It does suck because we know these different type of income and asset scenarios. Like, people have the money, right? They're working hard, whatever they're doing, right? Dancer, OnlyFans, I don't know, painting somebody's houses and taking in cash, right? Like, there's so many different ways to earn income in this country, but unfortunately for a lot of mortgage products, cash just doesn't work.
And that's in the conventional space. We've talked about the fact that we in-house here have our own NQM, which is a non-qualified mortgage slew of products. So with that, we can look at bank statements. We can look at P&Ls. We can look at rental properties and the rental income that comes in to offset the mortgage payment. So those, maybe not the cash coming through on the scanner, but if you're going to be getting one of these non-qualified mortgages, yes, your mortgage rate will be a little bit higher, right? But that's at the sacrifice of you paying a lot less or maybe $0 in income tax come tax time to Uncle Sam. So, I mean, you're still winning in that regard.
We've mentioned it so many times that if you are in a unique scenario, there is a way to get you into a mortgage. It's not going to be the conventional route, but there's so many different products out there. It's a big misnomer that, hey, if I'm all cash business, it's super hard to obtain a mortgage. Is it a little harder than the conventional way? Yes.
Yeah, it is. And we're not sitting here saying there's always a fix. It usually is.
Yeah, for sure.
It usually is.
For sure. They've made it easier for those unique scenarios to obtain a mortgage at a little bit higher of a price.
And we're not talking about stated loans, right? We have one outlet where it's a true no income loan on a primary residence, but you're looking at 20% down. Your credit scores need to be north of 700. It's different than sign a piece of paper, get a loan. Like, you are more qualified in other ways.
No doubt. No doubt. Awesome lab tested questions this week. We had 3. We're going to continue to do this on every single episode. This is, again, our favorite segment. We're going to keep it going on season 2. Now we're going to kick it to ourselves with Michael Glenn of Village Realty in the South Suburbs. An awesome interview we did with him.
Awesome interview.
We talked about the market in the South Suburbs, the market in general, his story in real estate, some different leadership things that he's encountered, how he's got to where he's at in his business. And there's a lot of good information in there for home buyers, home sellers, but also agents as well too. So if take a listen to this. This was a really, really good interview.
Yeah, Mike's a great fella, and he's around our age too. Definitely has that entrepreneurial mindset, which you guys will hear about. This is a little bit different for us, not doing the interview and the podcast on the same day, guys. So if you're watching, this is not a Taylor Swift concert, but you're going to see an outfit change.
There will be an outfit change, and then we'll kick it to ourselves in the lab with Michael Glenn, and then we'll be right back in the lab here to finish off the episode.
Love it.
Okay, we now welcome on a very special guest for episode 1 of season 2 of the Lone Lab podcast, Mr. Michael Glenn from Village Realty. What's up, Mike?
What's up, everybody?
Let's go.
Look at that applause, baby. Here, listen to that crowd in the background.
Thanks for coming on, bro.
Mike, thanks for coming on, brother. First and foremost, we wanted to introduce you. Kind of tell us a little bit about yourself, how long you've been in real estate, what markets and areas do you focus on? Kind of give us a scoop and the people the scoop behind you.
Okay, so got my license back in college. Obviously didn't go to college to study real estate, but got it one summer during college back in 2012. So that puts me right about 13 years now having a license. I've been full-time with it since 2017. That's when my dad took over a company called Village Realty that's headquarters out of Frankfurt. Me and my dad, since then, when he took it over, we had less than a dozen agents. And we've, over the 8 years that we've had it, we've built it up to about 450 agents.
Wild.
So yeah, I mean, I've been at Village the entire time, been full-time, both with Village and just with my own personal business since 2017. Closed just shy of 300 deals, and I think I'm at like a little over 75 million in career volume. So
when you said your dad has been in the business and been a part of the family, did you see yourself getting into real estate? Was that always the plan? How did that come about besides kind of being generational,
Yeah, so Village has been great for our family, but prior to Village, my dad was in a number of different avenues of real estate. He was a builder at one point, preferred developer for like Walgreens, Burger King, bunch of franchises that you've heard of. I've seen, I guess I should say he's been doing real estate my entire life, but not necessarily the brokerage side of things. I saw how tough real estate can be from an early age my entire life. And I thought I'd be out of real estate. I thought accounting was my career path, but life's got a funny way about it to where you end up finding what works for you. And honestly, it's been the biggest blessing getting into real estate, becoming a broker, and I love it every day. It's fun, but no, I did not think I was going to get into real estate.
What'd you want to do, or what was your plan when you were in college?
Find a job with a guaranteed paycheck and some benefits. Neither of which happened in real estate. and just start a little family, do my thing. I've done it just a little bit later and through real estate. So, just a little bit different. So
I love it. I love it.
Yeah, for sure.
Mike, a lot of our listeners, they hear about how the market is feeling from our side as a lenders, right? We work with you guys as realtors, but also home buyers. I think, the point of this episode was kicking it off for the new year, right? We're in January. It's a little bit slower season as we've seen over the past, but I'd like to kind of hear, what does the current market really feel from your side as a buyer's agent, a seller's agent, or even from you supporting your 400 plus agents right now? Like, kind of give us a scoop of what you're feeling right now in this market.
I think I have a unique insight about the markets because of that aspect, with being one of the go-to people for a lot of our agents. I'm not going to say all 450, but I have a lot of ideas and thoughts and concerns bounced off me on a day-to-day basis. So on a personal level, my business has been pretty strong, which I'm grateful for. Definitely a little listing heavy compared to buyer heavy for sure. I hear and I see a lot of agents maybe down a little bit on business. Definitely transaction count. Because prices have gone up, volume still tends to stay relatively strong. But,
Sure, good point.
But transaction count has definitely gone down a little bit. And then just from my own personal point of view on the buyer side, inventory being so tight in our markets, it's tough as a buyer agent, man. If you're a seller agent, if you're doing the right things, if you're pricing it right, doing the right things for the listing, they still move. Definitely maybe a little bit slower than they were a few years ago. But if you're representing a buyer, it could take some time to find the right home for them. It's just, there's not a lot out there. What's out there is priced high. The listings are far from perfect. They got things going on with them to where maybe a buyer doesn't feel comfortable moving forward at that higher price. So as a buyer agent, it can be tougher, but in general, it's not a weak market by any means. I would say it's relatively strong, and I'm hopeful with these rates going down a little bit. Maybe it even makes it a little bit stronger. But yeah, that's kind of what I'm seeing.
We talk about real estate being hyper local all the
Yes.
time on this podcast, and you two both being Frankfurt guys, explain to me why Frankfurt is absolutely exploding right now and why.
You want to take it or you want me to take it?
You can take it first.
All right. So I think Frankfurt's got a lot of small town charm while still having all the amenities you're looking for, not necessarily from like a city level, but it's not a rural town. It's got all the amenities you're looking for.
It's not far from the sticks, though.
Not far from the sticks, which I think attracts some people.
Yeah.
I think it's got incredible schools. And the downtown, while it is a little bit on the smaller side, especially if you compare it to like a Naperville or something like that, it's way smaller. It is really charming, and it does have some really cool restaurants and shops and things about it. So it is on the south side. It's one of the most charming yet developed and strong school and strong development towns, if that makes sense.
It's very inviting for families, right? Like,
For sure.
Without a doubt. I mean, when as the listeners know, I'm from the Rockford area, from up north, and moving into the south side, into that area with Sydney, my wife, and having kids. I didn't really know much about the south suburbs. I wasn't born and raised there. I second your testament, both of you guys, on it's close to the sticks, which I think it does attract people. But the big thing for at least me and Sydney moving to Frankfurt was the schools are amazing. You get amazing public schools without having to pay the Naperville or Hinsdale prices, to be honest with you. So that's what surprised me the most. Up in Rockford, it's the
private school, right?
Yeah, I mean,
Or bust.
and it's not, it is for, I don't want to hate on the public schools up there, but like that's, it was private or bust for us, right? So I think the school system is amazing in the Frankfurt area. I absolutely love it. I absolutely love being in the south suburbs, but
You can still get to the city nice and quick, too, right?
Yeah,
You got an express metro. It's not like you're
yeah,
on the train for an hour and a half.
right.
It's not bad.
No doubt about it. And I mean, being inviting for families, they do a lot of community events that I think are attractive. And I think other surrounding towns, New Lenox, one town I would mention, is kind of following suit, trying to do a lot of the same, but their own version of those kind of community events as well.
Absolutely. Mike, a couple of questions for you.
Yeah.
We'll just go rapid fire with some of these questions, if that's cool with
Absolutely.
you. What's something that you wish every buyer understood before Zillow scrolling? So what do you think every buyer, before they start hopping on those apps, what do you think they understood?
Man, what do I wish they understood before they hopped on Zillow as a buyer? I would understand that from a buyer perspective. If you're seeing an agent advertised on Zillow, that's not necessarily going to be the listing agent. It's not necessarily the agent that you should be getting in contact with. It's honestly, most of the time, it's going to be an agent that's buying leads from Zillow, and that's who they're connecting you with. I would get connected with the right lender and the right agent for you before you hop on any of those consumer websites. That's probably the biggest thing, because I mean, it is going to have all the information about the home, and that's not going to differ too much from site to site. But if you just click on the convenient button on Zillow, they're going to send you to somebody that's paying for leads.
Part of my initial consult always asks, are you, window shopping, doing the Zillowing and Redfinning of the world? And everyone says yes, but I know it's going to be a tougher sell when then someone starts talking about that way more than, oh no, my realtor, right? Like I'd rather be working with somebody as a team than no, I'm using this online agent. Like that's tougher for me too, because I'm going to get squeezed out of that deal. Right? Almost certainly I'm going to get squeezed out of that deal.
For sure.
Yeah, I tend to look at, a three-part team for every transaction on the buy side. It's the lender, it's the realtor, and it's the attorney in our markets. And if those three have somewhat of a good relationship, or at least a level of respect for each other, I think you're going to have a much smoother, better transaction, better experience, without a doubt.
All right. This is a question that I think all three of us can answer. What do you guys think are separating winning offers right now in a competitive market?
I'll let Mike start.
You got to keep it as clean as possible, without a doubt. Obviously, offer price matters, but financing terms, if you can eliminate contingencies to a certain degree, it's going to be your best bet, while still staying comfortable with the offer. You don't want to get reckless, start waiving inspections, anything like that. But the cleaner the offer, and I would say just the realtor going to like half a step above just bare minimum. Like if your realtor's not calling the listing agent, trying to introduce themselves, say, here's what I got coming over, and they're literally just sending over the offer for e-sign, sending the e-signed offer over to the agent without ever connecting.
Good luck.
It's tough, especially if there's going to be multiple offers on the table.
Yeah. In my eyes, because again, we don't write the offers, you guys do, but communication is key. Now, some realtors that I work with are really going to push me, the lending partner, to call the listing agent. I always like doing that. I think it's a really good first step. But that call sometimes is a lot more intuitive. It's full of more information, rather than sometimes it's just, hey, I'm introducing myself and letting you know that this is as clean as possible. We've got W-2 borrowers, all that good stuff. If those communications are happening up front, I feel from my side, even if that deal isn't going through, that I did my part.
I agree 100% with both of your guys' points on what separates winning offers. I don't have much to add from a sense of that's just kind of common knowledge with that stuff right now. And we know that. I think one of the things that you mentioned, Mike, was not having any contingencies, right? Sale of home contingencies. So shameless plug, once again, we do have products out there in the lending world at Leader One that can help avoid some of those contingencies if you have to sell a home. That's a big one that I see. I went through it with purchasing my place where I was contingent on the sale of our home, missed out on offers, like I said. So just know that there's products out there for people who do have those contingencies. Jimmy, you mentioned talking about giving a call to the listing agent as the lender. I have a question for you, Mike. How much does lender reputation actually matter when you're when you're advising sellers and buyers as well too? Like, is that a big deal to you, to your agents? Kind of give us like the importance of the lender reputation.
To me, it's a big deal. Maybe not to all agents. I can only speak for myself, but to me, the reputation, number one, does make somewhat of a difference. Number two, if they are calling me, that's somewhat unexpected as a realtor. I take that as a positive thing if they're reaching out. Number three, if they're not calling me, if I try to reach out to them with a phone call, I'm hoping they're either answering or getting back to me pretty quick.
Sure.
If I'm calling and I'm getting crickets and no response, it's doing the opposite. It's reflecting in a bad way for
On to
sure.
the next one, right?
Yeah, absolutely. And to your point, the plug that you have, and I might be speaking a little out of turn here, but that plug about the ability to submit an offer without the sale contingency, without a doubt, no exaggeration, can make or break an offer without a doubt. Can be the difference between the client, the buyer, getting in the house and like not even be taken serious as an offer.
We always joke that those get thrown to the bottom of the pile. Of course, we don't know that, but like you got a contingency. Sorry, right? Like that one's
For
not.
sure.
It's just not being looked at as seriously.
Absolutely. I can remember one time where I had a client offer accepted with contingency in a multiple offer situation, and I couldn't believe it. It didn't end up working out. In general, you're right. They end up going to the back of the pile. It's just a fact. It's, a seller's having a hard enough time getting their own home sold. Now they have to depend on your agent getting your house sold, and they only know so much information about your home. It's a tough story to sell a lot of times.
Yeah, it's going through it myself and us selling our homes this year, we had offers coming in and it's like, if you're contingent, like I'm freaking out enough about selling this home to begin with. I can't, worry about somebody else getting a loan down on your place. And it's definitely very convoluted as a seller in those shoes of freaks me out a little bit.
Well,
it's tough.
It's tougher for the seller. It's tougher for your agent too, because then all of a sudden that the realm of communication goes out to other parties. Now you're following up with other people that you wouldn't have otherwise had to follow up with.
Oh yeah,
for sure. All right, let's switch it up. We've been talking about consumer and sellers and buyers. Mike, I want to get some of your takes on like your personal brand, your business growth. I know you do a great job over at Village with helping out all the agents, but doing your own business as well too. So first and foremost, like where are you generating most of your business nowadays in your seat at Village?
Yeah, so like I said earlier, this is year 8 or 9. Since 2017, I've been full-time with it. The way I am generating 100% of my leads, or pretty close to it, is just what we would call sphere of influence marketing. It's just staying in touch and staying on top of mind for all the people that know, like, and trust me, friends, family, past clients, business colleagues, etc. I have in 2025 and 2024 too, started seeing some agent to agent referral that I've benefited from as well. Specifically, I'm licensed in Indiana too. So with any of our Village agents or some other agents I have positive relationships with, if they're not licensed in Indiana and looking to refer somebody, I've had some success with that as well. And then sometimes, being one of the owners of our brokerage, we do have some situations where agents aren't comfortable taking a lead, aren't confident taking a lead, and they'll pass it on. That does happen, but it's pretty far and few in between.
If you have, all right, I'm going to give you a hypothetical here. You have a brand new agent that comes in, signs up with Village Realty, doesn't have much experience, maybe none or little to none. What's the first thing you're telling them to do to kind of get kickstarted? Like what's your, I don't want you to give away all your secrets, right? But what's your,
but I'm more than happy to share.
What are you telling these people who are coming in who have no experience that want to get their business started?
Yeah. So whether you're a new agent at Village or just a new agent in general, probably the same would apply to a lender or really anybody in like a sales field. I'd recommend getting some sort of mentor in place that you feel confident that you could go to answer all the dumb questions that you're going to have and not feel dumb for asking them. You're learning. It's part of the deal. You got to have some people that you can go to ask all the questions, because you're going to have a lot of them. That's number one thing I would do is find somebody that, you can look up to as a mentor that will answer your questions.
Isn't that funny? It's just everybody needs to heed those words. We talk about
I would
it
answer
all
the
time.
same way though.
Same.
I would.
Yeah. And
same.
A personal failure story of mine, before real estate, I got into insurance.
Okay.
And I tried to do it all myself. Didn't have any kind of mentor. I'm not in the insurance business anymore. I'm in real estate. And there's a reason why. And I look back and I think that's probably the big reason why. I just try to like set out on my own, do my own company. You got to learn from somebody. You got to put your time in. You got to pay your dues.
You do.
It's just how it works. It's the best way to set yourself up for success.
I mean, he and I started in consumer direct in the office at 9 a.m, there till 10 at night some nights, just drilling the phone. Right? Like that's how we learned the business. We had great mentors along the way to basically teach us, take the call, have the intake, and be like, what do I do with this? Otherwise, I'm just a chicken with my head cut off. 100%. I have no idea what's going on. Yeah, you have to learn.
The guy sitting right over here, and the best guest of all time, who was just in the podcast room saying, "When am I going to get back on?" But he was our guy, right? We would take applications and be like, "What the hell do we do now?" Bring it to him. Yeah.
No. Yeah. I mean, you need somebody sending you in the right direction, answering some questions. Luckily, I got my dad. He's kind of a built-in cheat code to a certain degree.
That's a good
for
mentor.
me, you know. He might not have the residential, like realtor, getting in front of clients type of experience that a lot of realtors might be looking for. The guy sold over $2 billion worth of real estate. He's got
the business acumen.
He's got the business acumen. He's got the real estate knowledge. And he also is not too proud enough to where if he doesn't know something, he's not going to BS me. He's going to tell me, go figure it out. And if I were you, this is how I try to figure it out.
Right. There's not always one answer to a question or one fix to a problem.
For sure.
So solutions come not so easy sometimes. And those are the hoops that you have to jump through in any sales gig.
Yep. No doubt.
Can you pinpoint one thing that's helped your growth as an agent, person in this commission-based only business? Can you pinpoint one thing that's helped your growth from start to finish? It could be a person, it could be reading every morning, motivation, faith. Is there one thing that you can pinpoint or a couple things?
Yeah, I would say two. Number one, not everybody's going to have this opportunity. By being one of the higher ups at Village and being the go-to for a lot of people, I have learned exponentially faster. And it, I might only be doing anywhere from 30 to 50 transactions a year on my own. I probably have the experience of somebody doing double or triple that, just because I'm talking through so many situations with our agents.
Great point.
So, I would say that for sure. And then anything else, I don't know the right way to phrase this, but having a handful of years before getting super serious with my now wife, where I was just grinding like nonstop and just kind of putting the time in, not saying you have to be a single person, you could be in a relationship, but like having your foundational years, your first 5 or so years where you're like putting real estate or your work kind of above almost everything. I think that paid huge dividends as well.
I mean, that's how it was for us too. I just talked about being in the office 10 to 12 hours a day, grinding, not getting to the gym. Like all I cared about was work. Like I put on the mortgage 15, like people say. And it was like, shit, do I regret it? Like I still look at those times and think about it being like some of the best and worst times of my life. Cause I just worked so damn hard and it did pay off. Yep. But to your point, there's sacrifice there.
Yeah. It's lonely at times. Right. And I'm so happy with where I am now. I have the best wife, best son. It's the greatest thing ever. Towards the end of these years I'm talking about, I'm wondering to myself, I'm working hard. This is great, but what's it all for? And then life kind of figures itself out. But to have those years where for 5 years you establishing your clients, you're establishing your skills, your values within the business, and really going all in on it, I think it paid off tremendously.
Yeah, I mean, not to be morbid, but I think we can probably agree on this. I don't want when I die, whoever's doing my eulogy to be like, Jimmy was a hard worker.
Right.
Like there's a lot more to life than that, man.
Yeah, no without doubt. A doubt.
And it goes back to what we do every day, which is helping people, obtain the dream of homeownership.
There's a time and place to pay your dues and grind, like you guys said. And you want to do that before you have that family foundation. And we still work hard. We still bust our ass now, but I don't think all three of us, I know both of you guys very well. All three of us do it to an extent of where it's not creeping into our family and ruining our family. Cause that's why the fuck are we doing this then? Right.
100%.
Yeah, man. I mean, if I was 40 years old, getting my feet wet in the mortgage business with a couple of kids, like it'd be very difficult.
Very tall task.
It's a very different industry for many different reasons. But those couple years, like you said, Mike, to start where that grind really needs to be the grind. It's almost a necessity.
Yep.
All right. One more quick realtor plus lender partnership segment, and then we're getting Mike in on the Bears talk because he's a huge Bears fan. So we'll get Mike in on the Bears talk. It's very exciting times right now. But before that, question for you: what makes a lender like truly valuable to you as a agent? But also, you can even go into the sense of buying your own place. Like what's valuable to you from a lender standpoint?
Yeah, so I'm not a lender, so kind of like the mentor segment or mentor points I made. I want a lender that when I ask them questions isn't going to talk down to me. They're going to answer. They're going to make me not feel stupid. They're going to help guide me because I probably have a better knowledge of the lending side than the average consumer. I'm not a lender. I'm not doing this every day with like you guys. So whether it's for myself or for my clients, I'm hoping that They're not going to be arrogant about how they do their job. They're gonna be educational and informative. That's probably number one. And if I'm sending referrals to my lender partners, I'm absolutely hoping they take 5-star service of my referral clients. So yeah, I mean, just answering questions without making me feel dumb. Obviously, hoping the rate is around the market rate. I'm not looking to pay points on it or anything like that. And then yeah, just stay in touch with me afterwards. Don't become a stranger once we close. I'm hoping, just like I hope with my clients, that it's a lifelong relationship. We're in the relationship industry. I'm hoping you guys are keeping a relationship with me or with mutual clients just the same. So
Yeah, delegation is so hard in any business. We
Yep.
talk about delegation in the mortgage business being specifically hard, but it's the same with the referral. If you're giving someone that's come to you, trusting you for real estate advice and ultimately your business, and then you're sending them to a lender, you want that person getting the same treatment that they would had you been the lender yourself,
100%.
right? Like
It's an extension of
It needs-
all of
Exactly.
us. We're all an extension of each other.
with the whole accepting of, I can't do this part,
Yeah.
but I know this guy can do it really well.
Yep.
So here is his contact information. Here's the introduction, and you guys take care of this.
for sure.
What do you expect from lenders if a deal's going sideways or a pre-approval is going sideways? Like, what's your biggest expectation? Because we know that we're not perfect. Nobody's perfect. What do you expect from a lender if that sidewaysness?
I would expect.
Sidewaysness, is that a word?
Sidewaysness.
I know
It is
exactly
today.
what you're trying to say. If things are going like the first half, they're going for the
they're going
Bears
like the
game.
first
Right.
half of the
Yeah.
Green
Yeah,
Bay
yeah.
game. Yes,
So,
yes. You expect Iceman to come save the deal, huh?
I'm expecting two things. I'm expecting number one to be included on that insight, right? If something's going sideways and I referred somebody to you, or if I'm working on the deal and I didn't refer somebody to you, it just happens that we have a mutual client. Don't keep me in the dark. Bring me in. Let me know what's going on. I'm not going to overreact. I'm going to be a man about it. I'm going to, just ask the details so I know them and I'm not in the dark. That's key number one. Key number two, I'm expecting that you're not going to just ignore and run from it. You're going to, have this conversation head on with a client. You're going to explain to them what's going on. You're going to try to fix it. If you can't, life happens. It is what it is, but you're not going to run from it and you're going to keep me in the loop are really the two things that I would ask for,
We have lenders that listen to this podcast, and hopefully there's some like lenders out there who are newer and maybe haven't experienced this, but I can give you guys, give the listeners and you guys some insight. When I first got in the business and shit went sideways, I wanted to turtle
Yeah.
and not bring it up and shy away from it because I was so anxious. I was worried about the client. I was worried maybe about the realtor partner. What are they going to think? What am I going to do? I've realized that when problems arise, I'm going to be more anxious if I don't attack it head on and get it over with, meaning attack it, try to figure out a solution, keep everybody in the loop. That was one of the biggest mistakes that I made as a new lender, is trying to hold it all in and not let everybody know what was going on. And it made my anxiety much, much worse.
I remember trying to hold off to make bad news calls sometimes on Fridays, even if it happened like Tuesday, because someone told me make those calls on Fridays. Like, no, just be a man. Be
Yeah.
upfront, solve the problem to the best of your ability. And if it can't be solved, wouldn't you rather know that it went sideways 3 days prior?
Yes.
Yep.
Yes. And I mean, that kind of goes for anybody throughout the transaction, whether if a client gets bad news on something, call me, let me know. If the realtor on the other side of the transaction has bad news, please keep me in the loop. Like,
Yeah.
And I hope when I am going through transactions, the other parties feel that I'm approachable and, they can come to me if things are going sideways. I'm not perfect either. Things happen. But ultimately, we're all trying to get this transaction closed. And if something comes up that's getting in the way, everybody's got to know about it.
Yeah.
I love it. I love it. Oh man, just some great stuff from you, Mike, and from
Thanks,
all
man.
of us on the loan side, real estate side of things. And I'm going to give you a chance to plug where everybody can find you
Yep.
once we finish our interview with you. But
Let's get to the important
let's
stuff.
get into
Yeah,
some
absolutely.
shit. Let's get into some shit. Now, Mike's a listener of Loan Lab podcast.
Yep.
He knows we talk Bears. Mike's a huge Bears fan. It's an honor to have him on and talk some Bears. Last episode before the new year, James, we hadn't played the Packers yet.
No.
we were going to Soldier Field to play the Packers, and we have the overtime Iceman throw to solidify winning the North. We've won the North. We've then since lost 2 to San Fran with the shootout. Detroit at home, which was just kind of a weird game. I remember texting you, Mike, and being like, it was weird in the stadium. Like, not much on the line there besides the 2 seed.
Which they still got. They lost and were gifted that 2 seed. Because Philly's an even weirder team that we won't talk Philly.
It was, so it's a lot has happened since the last episode, and gosh, has it been freaking awesome since the last one.
I'm still riding a natural high.
It is
the
crazy,
Bears, man. Life is more fun when the Bears are good.
Let's talk about
more fun.
Let's talk about that, because I've been seeing that on the different, the score, and listening to it on ESPN 1000, and just how awesome this place is, the city is when the Bears are doing good. Like, are you guys feeling that right now? Like, I just like feel like amazing.
Dude, on Sunday, I went to York Tavern, shout out York Tavern, one of the best burgers around here in Oak Brook, with my dad and my daughter. And we were sitting at one table, and it's a smaller place. Like, every single table, we're just talking amongst the whole restaurant about the Bears. It's incredible.
Everybody's got their Bears gear on all the time.
Everybody is talking about the Bears. An 85-year-old woman's like, "Did you see that throw?" I'm like, "Hell yeah!" It's nuts, man. That's what we want. That's the Bears bring people together.
It's
football. Everyone loves football.
Yeah, man.
When the Bears are good, look out, man.
When the Bears are good, it's a little less cold out. Your wife's a little hotter. Life's a little better, man. It's incredible.
Let's go.
Hell yes. Hell yes. All right, so let's do a quick preview of divisional round at Soldier Field. Rams, Bears, Sunday night football, 5:30 kickoff, which is a night game, but it's still a little, it's not the normal 7 p.m. slot. I think they do that just because it's divisional round. Is that why they do that? And they got to get the networks and
it's
TV.
Something with the networks,
something with the networks. But big game
nice
coming up
cold.
on Sunday. What are we thinking? 3.5 point underdogs at home. I think we'll be underdogs if we win this game for the whole rest of the year.
For sure.
What's our predictions? What's our thoughts, Mike? We were talking about it before we got on the podcast.
I think the weather is potentially going to play equalizer in this game. I mean, if this was in LA, at SoFi, I'd be lying to you if I told you that the Bears had like a pretty good shot. Obviously, that's why you play the game. Anything could happen, but I would think the Bears would be pretty significant underdogs. Yeah. And I wouldn't know how our defense would slow down that Rams offensive attack. But I think they're talking like close to single digits for game time. I think that's going to be the great equalizer in the game. I think it's going to be anybody's game. I think it's a toss-up. I like those chances, though, better than if they were at SoFi. That's for sure.
I agree. And I think the over's 50, but I don't think the Bears can win unless they score 30 points. So give me like 31-28 or 34-31 Bears. I think it's going to be another.
That's an over.
Yeah, it's an over. And it's going to be, that's the only way they win, if they hit the over. I just don't see it being a slugfest unless they get after Stafford early and his finger's all screwed up. And then all of a sudden Caleb looks weird and it's just both teams are running the ball. I like the Bears' chances a lot if that happens.
I have a weird feeling that they can win this game and that they're going to win this game, man. Yeah. And I do
at
think
home, man?
that's and weather aside, that and I'm fortunate enough to be at those, this game, the first Packer game and then the last one. It is fucking unbelievable in that stadium. It is electric, and I haven't felt that before, probably ever. I've been to 1,000 Bears games probably, and it's never been like that. And weather aside, that crowd, man, I mean,
shaking.
It's shaking, but also the, Jordan Love, I think 2 delay games.
Yeah.
Right?
Out of a timeout, man.
Out of a timeout. Like, that shit matters.
Couple of grounding penalties.
Yeah.
He had 1 coming into that game and had 2 last Saturday.
I think Stafford's a little more not a little more. He's a lot more savvy than Jordan
Love.
But I do think that crowd and the home field advantage works heavily in our favor. And you said great equalizer, Mike. I think that's a great term. And weather plus that, I think we can pull this one out.
Sean McVay's never won at Soldier Field. It's 2 games, right? But let's make it a third.
He's freaking buddies with LaFleur too. Did you hear that? See all that?
Of
course I talked to Matt. I can't stand. Everybody's all buddy. Can't stand it.
The Bears,
not BJ.
The Bears might be the worst team left in the playoffs.
I think they're one of. Yes.
But that being said, they could beat any of these teams. They could lose to any of them. Don't get me wrong, but you catch the Bears on the right day. Our offense is good. our defense has just got to play average and, play like that second half of that Packers game. And I mean, they could pull some upsets.
That second half was so strange. We're used to seeing the Bears take the ball away and that give up a bunch of yards, and that's how they get it done. Not just 3 and outs and grinded out stops. The Matthew Golden play was insane.
Oh, yeah.
But other than that, like that defense played so remarkably well in the second half.
I thought that Matthew Golden play was the nail in the coffin. And I've been seeing everybody
Before
hate on him. He hasn't scored a touchdown all year. And then I was like, is this the one to put the Bears away? His first touchdown of the year?
You would never hear the end of that from
we have the
Packers
Iceman, bro. Like that guy is amazing. And he's
and we got the Pope, dude.
And
Pope's
we got the Pope,
And we got the
Iceman, Ben Johnson. It's
That's a good trio.
It's a fun time being a Bears fan, and it's awesome. Yeah, Mike, we had to talk that because I know me and you, that's pretty much all we talk about on our texts. We're just talking about the Bears, and me and James are always texting about it. So we had to keep it going. Our predictions have come true from not our exact record predictions, James, but we said we're making
close.
the playoffs.
I think I said 10-7.
Yep, I was 12-5.
I mean, both very close. One
Respect to you guys.
Yeah.
Those are some serious projections.
We were meatballing our predictions without a doubt.
Yeah.
Without a doubt.
But not bad.
No, not
quick
bad.
shout out to Colson Loveland, dog.
Oh
Absolute
my gosh,
tank,
that guy.
dude.
He's a dog. And my wife,
He's gonna be all pro next year.
My wife loves him. Like
boy.
she wants to, like she would leave me for Colson Loveland. He's a handsome man. And my wife, all the girls are loving him, and he just makes plays.
Big love, baby.
He just makes plays. They got a good squad, man. It's very fun. It's a young, good squad that's
They're gonna be good for a long time.
Got some good vibes going. So hopefully next episode that we're filming, James, and recording,
we're at the Super Bowl.
we're getting ready for a Super Bowl. We can only hope and pray. But hey, we've been riding it for this far. Let's see if we can keep it going.
Man. This is not loser mentality. I'm just stating a fact. It's been a very fun season.
Super fun.
Let's
Super
keep it going.
Fun. Mike, thanks again, man, for hopping on.
Awesome time, man.
Where can people find you, get a hold of you? Where can they see you online? Your number, email, and anything you want to say about the brokerage, about you. The floor is yours, brother. Plug yourself, and then we'll include some links to where they can find you in the YouTube comments below if you're watching this, and then we'll put them in the comments on Spotify, Apple Music, wherever you're listening to your podcast. We'll put them in that description as well.
Yeah, so just the 2 plugs I'll throw out there is just personally, all my social handles are at Realtor Michael Glenn, Glenn. And then on the brokerage side, if you have any interest in exploring your options and potentially changing where you do business, our website is joinvrs.com, joinvrs.com. Thanks for having me, guys.
Of course, brother.
Love
we
it,
appreciate you being on. If you guys are listening, we thank you so much for getting with us on episode 1. Season 2.
Episode 1.
Season 2, episode 1 of the Lone Lab podcast. We got a bunch of great stuff coming, content your way. And we appreciate you guys being here with us today.
And go Bears.
All right, we're back in the lab. James, what a great interview with Mike, man.
Awesome interview. Great dude. Someone that I think as a new agent, you might want to call somebody like that because he's young. He has the game plan because he's done it. Now, like you said, he had a fantastic mentor in his own dad, but he's also got all these different agents now coming to him. And he said it plainly. I'm learning on the job still with these people coming to me for these different problems. You and I have that too, man. Like we still learn every single day in this business. And that's why it's so great. It's so vast. There's so much that you can do with your time each and every day as an entrepreneur.
Besides all of the intricate details that we got from him and us with the housing market and rates and selling and listing homes and buying homes, one key thing that sticks out to me with these very good producers who are great people. We've had Sinton Sean and Mike Glenn, who are they're all very good producers. Is they've always mentioned, hey, we had a mentor to start.
Right.
And if you're listening to this, whether it's you're in real estate or you're an entrepreneur or you're trying to move up in your job, you can't do it yourself.
You got to cling on to somebody.
You got to cling on to somebody that you
and
trust.
make it known.
Yes.
Be like, hey, I need you.
Without a doubt.
I need to be able to learn the right way from the right people.
Yeah, the people who struggle is they don't think they need the help, and we all need the help, and we all need people around us to continue to push us, hold us
Mike
accountable.
And Mike says that. He tried to do the insurance gig when he was like, hey, maybe I don't want to do what my dad's doing. I'll try insurance. And it's not like he sat there and said, hey, I failed miserably, but he didn't love it because he didn't have anybody to look up to, anybody to learn from, really.
For sure. Go check Mike out on all his socials. He plugged himself, and we'll have him in the comments and the description of these episodes below. One thing we do need to address before we
before we part.
send it off is I know we talked Bears with Mike, who's a huge Bears fan. That was before the divisional round playoff game.
Yeah.
Unfortunately, the season is over, James. We've been kind of talking about it. It is 4 days after. Yeah, Thursday, 4 days after the divisional game. Where's your head at? I'll give you where my head's at, and then we'll kind of wrap a bow on the Bears season.
I can breathe a little bit easier today. It's getting better every day, but Bears depression is real. This is nothing like the double doink because it felt like that was, for some reason, even though there was a lot of hype still for 2019, that was so much more deflating. And maybe it's because, then we had Nagy who came out, he won Coach of the Year.
Yep.
And Ben Johnson very well may do that this year too, but people still didn't believe in Mitch. We've got our coach and our quarterback. I don't think there's going to be any type of step back next year. And that's what's different in my head.
I told you before this, I didn't talk to Sydney, my wife, for a couple days.
So goddamn funny.
The being at the game and walking out, I could feel the vibes were a lot better than the double doink. The double doink was awful.
Yeah.
I was there as well.
Yeah.
And it was actually awful. People were mean, vile, like everybody hated each other. It was not good. Different vibes walking out of that stadium after the divisional loss in overtime.
The Bears lost with a little bit more grace, which sounds so weird, but they did. They lost on a game-winning field goal to, what very well may be the best team in the league.
I was a little more sad walking out because I think there was a missed opportunity.
Yeah.
Although, and I told you this season was probably the best season I've ever experienced, even though they didn't go to the Super Bowl like they did in 2006. It was just an amazing, amazing year with all the comebacks with Caleb, with Ben.
But it was never a sustainable way to win.
No.
And that was proven by a loss in a game that they should have won because they could have won that game.
Yes.
And I'm not just talking about the interception. I'm not just talking about that. There's a lot of missed opportunities, specifically in short yardage situations, which the Bears struggled in all year. I would rather have Caleb in 3rd and 5 and shotgun knowing he has the ball than 3rd and 1 or 3rd and 2.
Yep.
And that's not a good thing.
No, it's not. I'm to the point today, again, it's 4 days after. I was mad after. I was sad walking out. I was mad for a couple of days. We're getting there, it feels like, where I'm excited, trying to get excited, but there's still ball left. We have some fun championships this week.
It's a great weekend coming up.
It's a great weekend coming up. All in all, an amazing, amazing Bears season. One that I don't think we'll ever forget as Bears fans.
So
It
cool,
brought
man.
families together. People in my family who weren't the biggest Bears fans became diehards this year, which you can't ask for anything else than that.
My wife hates football. But she's like, the Bears are good. I'm like, all year, I'm like, they're before the season's like, they're going to win the Super Bowl. I say that every year. Season goes on. It's like, hey, they're actually winning games. It didn't really stick with her until they made the playoffs. Even after beating the Packers and winning the NFC North, it's like, oh, they're actually vying for the Super. Like, they can win the Super Bowl. It's like, they are in the playoffs. Anyone can win the Super Bowl.
Yeah.
It took that long, though, for her to believe. She's just used to them sucking. And they have sucked.
We'll look back on this season and never forget it without a
So
doubt.
fun,
But
man.
I just don't think I'm there yet of like, there was just a missed opportunity and I can't stop thinking about it. And I think I will once this season is over with and then get excited for the next year.
Well, we could, again, talk about this for an hour. But I think one thing, perhaps, that's in my head is most important is they need to learn how to dominate. They didn't dominate at all this year. Games like the Saints, for example, where they win, and like the score looks like they won somewhat handily, or even the Browns. Like those are some bad football teams that they couldn't put away.
I agree.
They just couldn't do it. So next year, it's all about stepping on the throat and really dominating football games.
Yeah, and again, last thing on the divisional game, I've been saying this all week, is that's not winning football in the playoffs.
No.
What they did out there was not winning football, and they still had a chance to win it in overtime. They stop them coming out and then need 15 to 20 yards to get in field goal range.
Well, I like what you said. They should have won, not could have.
Yes,
And
they should have won the
I
game.
agree.
They should have won the game without playing winning football. One thing to, again, just end the Bears season, we'll put a cap on it, is the Lone Lab podcast has a 12. What is our record during Bears season? What did they actually end up? I know they went 11-6 during the regular season.
11-6.
12-7.
12-7.
Pretty damn good record for the Lone Lab podcast.
I think it's going to be better next year.
We got to be better.
Let's go. We're improving. The Bears are improving. Mortgage rates are improving. Let's go.
Let's go, baby.
Thanks, everybody.
We appreciate all of you guys for listening, for commenting, for liking. Please send us a follow. Engage with us on our social media platforms. You can find us for clips on Instagram at Lone Lab Podcast. If you're watching this on YouTube, hit that subscribe button, hit that bell to know when all of the new episodes pop up. You can find us on Facebook. You can find us everywhere that you can listen to or watch podcasts. We are there, and we appreciate you. We are coming up on 750 downloads of the podcast. We're going to get to 2,000 this year.
Only up from here. I love that goal.
We're going to get to 2,000 this year. We appreciate you all. We'll see you next time on the Lone Lab Podcast. Everybody, thank you.
Let's go.